Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Today will be Tuesday, the 17th of June 2025. So as usual, before we kickstart today's Daily Dose of Market Insights, which we will be going to be very interesting, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Right. Okay, so I believe the screen is good. Yeah, great. So as usual, before we jump straight into the intraday technical outlook on the major US dollar pair, the major stock indices, and as well as the two key commodities market that we cover on a daily basis, which is the gold XAU/USD and West Texas oil. Let's have a recap what has taken shape yesterday in terms of news flow, data release, and as well as things to look out for in early Asia session that has a impact on the intraday movement on these cross asset classes. So I would say that yesterday is a volatile day. That means we have witnessed two-way volatility, especially on risk assets. That means the major stock indices, especially on the major US stock market. Okay, why do I say so? So if you were to look at yesterday's performance of the US stock market, as you could see on my screen over here, yesterday, the first hour of the US stock market, the S&P spike up in the open. So after spiking up in the open, it can't maintain its momentum and it's dwindled down towards the closing, towards the second half of the US session, and still end in the green, I would say. All right, so very familiar. The SPX managed to end at 0.94%. The Nasdaq outperformed at 1.42%. The Dow Jones underperformed at but still a positive gain of 0.75%. And the Russell 2000 is up by 1.12% over here. Right. So what I could see over here is that all the major US stock indices spike up at the open or in the first hour of, I would say that in the first half of the US session yesterday, and thereafter the intraday gain starts to trim off as the US session hit into the second half of the day in yesterday. Over here, similar for the Dow Jones Industrial Average as well. So what's interesting over here is that the spike up on the SPX 500 and the spike up of the Dow Jones Industrial Average managed to be kept at our respective pivotal resistance that we highlighted yesterday. So if those who followed my daily dose of market insights yesterday, we do have a bearish bias on the US Wall Street 30, which represent the Dow Jones Industrial Average, and the SPX 500. The Nasdaq 100, a bit of nasty, it actually hit our pivotal resistance at 22,000 830 over here. And what's interesting over here, 21,850 mark, and after that it managed to actually come down in today's Asia session. All right, so later I'll explain to you the current situation right now. So what causes the spike up earlier in the major US stock indices yesterday was this encouraging news flow coming up from Iran-Israel conflict, where Trump actually mentioned yesterday that Iran wants to talk. All right, that means Iran wants to actually go to the negotiation table to negotiate the restarting of his nuclear so-called program, potentially. That means there's some carrots being given out. And because of these news remarks from Trump, stating that Iran wants to actually re-entered into the negotiation table again, that causes the stock price to actually rebounded. So the stock price rebounded. We start to see a sell-off in WTI crude oil price yesterday over here. So WTI crude oil actually went down to negative 2.2%. So later I'll cover the technicals of the WTI crude oil. Yeah, despite it went down by negative 2.2%, it managed to actually find support at some key technical elements, which I'm going to cover in my short-term intraday technical outlook when I cover the West Texas crude oil over here. Right, and also gold prices fall a fair bit as well. Broke down. Okay, let me share with you gold price over here. All right. So I could see that gold yesterday tumbled by negative 1.4%. All right, negative 1.4%, but managed to play around at the 3,400 psychological level. All right, over here. So yesterday, encouraging news flow in the US session sees a risk on in the US stock market, sell off in gold and sell off in the West Texas crude oil. And the dollar continues to trade sideways over here. So if you look at the 5-day rolling performance of the dollar against the major currency, it continues to dwindle in the sideways fashion over here. And if you look at the dollar index, it continues to remain kept below this near-term resistance level that was previously the minor swing low of 3rd of June, now turns into a pullback resistance at around 98.50 and also below the 20-day moving average that is acting as a resistance at the 99 figure level. All right, this is the 20-day moving average. So the not much movement in the US dollar yesterday or in the FX market, but more so on the stock market where we see a risk on in the US stock market, leading to a fall in West Texas crude oil and gold. But however, what's interesting is that in today's early Asia session before the start of our daily dose at 11 a.m. Singapore time, yeah, there's this news over here. Where is it? Yeah. So oil resumes advance in today's Asia session after Trump calls for evacuation of evacuation of Tehran over here. So based on this situation over here, saying that, okay, 1 second. Okay, US President Donald Trump called for the evacuation of Tehran as Israel vote for more strikes, okay, keeping the market on the edge without about a potential escalation that could disrupt crude supply. That means, i.e., whatever earlier Trump claimed that Iran wants to actually talk seems to be dwindled off in today's Asia session. And the latest situation right now, the conflict doesn't seem to de-escalate between Iran and Israel. And what's interesting over here is that for and also Trump himself is actually attending the G7 summit in Canada. So right now, as we are speaking, is Canada. We're talking about 11 p.m. Canada timing right now. And Trump was being reported that he actually eruptly depart G7 after calling for Tehran evacuation. So that actually gave a signal that he's heading back to Washington to prepare for something significant. So that kind of give a bit of we call it a sentiment, a souring of the risk on sentiment. I would say a souring of the risk on sentiment that was seen in the US session yesterday, and that saw the crude oil prices spiking up as we are speaking right now. So if you look at the WTI crude oil price, it's actually rebounding up by 0.79%. And also there was also a report earlier stating that this, where was it? Yeah, 3 ships on fire in the Gulf of Oman near the Strait of Hormuz. Okay, so this Strait of Hormuz is very important. It actually is the choke point that control the major supply route, oil supply route in the Middle East. All right, so it seems to us that these 3 ships on fire could be potentially be sabotaged by Iranian airlines. Right, they actually wants to actually choke global oil supply in the Strait of Hormuz. So this Strait of Hormuz is very important point in the Middle East, where oil supply comes up from this area to the rest of the world. Okay, and with that, we start to see a mini risk off in the S&P E-mini futures and the Nasdaq 100 E-mini futures in the Asia session as we are speaking right now. Both of them are down by negative 3% each over here. And that also created a bit of a mixed bag situation in the major Asian stock benchmark indices right now. The Nikkei is up slightly by 0.5% as we await for Bank of Japan monetary policy decision that could be due very shortly in a while time. Later we will reflect on that, okay, as we approach it. And the Hang Seng index is down marginally at negative 0.25%. And the China CSI 300, which is the benchmark for the Chinese A-share stock market, is down also by negative 0.2%. Southeast Asia stock market, the STI managed to outperform by positive 0.45%. Further upwards, the Kospi is up by 0.72%, and the AXX 200 is almost unchanged at negative 0.05%. So I would say it's a rather mixed bag situation for the benchmark Asia stock indices over here. All right, so now let us take a look at the calendar. All right, whether the Bank of Japan decision is been out, because the Bank of Japan decision, market participant is expecting no change in the interest rates. All right, so they are actually expecting it to maintain intact at 0.5%. Okay, where is, okay, why is it not showing? Okay, should be, okay, yeah, so it's not out yet. It's not out yet. Okay, so let me refresh the calendar. Okay, it's not out yet. Okay, so now let us now focus on the second segment of today's daily dose of market insights. Okay, before I go to the second segment, there's one particular news flow I would like to highlight as well. Almost forgot about it. All right. Okay, where is it? Okay, let me hit the news flow. Yeah, this is the one. Okay, so I hope you can see on my screen. So basically, yesterday on the sidelines of the G7 meeting, Japan unfortunately didn't manage to actually reach any trade deal. I mean, between the two leaders during the sideline, PM Ishaba, which is the Japanese PM, and US President Donald Trump. So that also explained the current so not so rosy performance on the Nikkei 225. So later I explain the Nikkei 225 from a technical perspective is now being up at the range resistance at this moment in time. All right, so no potential trade deal that is being so-called firm up during the sidelines meeting of US President Trump and Japanese PM Ishaba. So we know that the reciprocal tariff 90-day pause by US White House administration is pretty much due in 9th of July. Right, so now let us now head off to the second segment of today's daily dose of market insights, which is the intraday technical outlook. All right, so let me expand my screen so that you guys could have a better view of the charts. All right, over here. Okay, so let us start with the FX market. Yeah, so on the euro dollar, no change. The euro dollar yesterday managed to actually stage the bounce, retested the high that was seen last week on last Thursday, which is at this 1.16 figure level. Okay, 1.1610 figure level before trading a bit of minor pullback as we're seeing over here. So what I could see over here is that the situation on the euro dollar remains robust for the bulls as price action continues to see a series of higher low, right, over here. Okay, see a series of higher low. So with that, I would tighten my short-term pivotal support level for today, adjusting slightly upwards to be the last Friday minor swing low area. We also managed to be a pullback support of that former minor swing high of 5th of June and 12th of June, which is last Thursday before it actually shaped that rally. Okay, so 1.1490 will be my adjusted short-term pivotal support for today on the euro dollar, still maintaining our intraday trend bullish bias. Yesterday's swing high, which is the minor range resistance that is in place since last Thursday, will be my first resistance to watch for today at 116.10. Above 116.10 exposes the next intermediate resistance level at 116.60/116.90, which is a confluence of a Fibo extension clustering level. However, bearish reversal move down and a bearish breakdown with an hourly close below 114.90 that would invalidate today's intraday trend bullish bias to see the start of another minor corrective decline sequence, exposing 140.40 figure, which is pretty much close to the rising 20-day moving average. A breakdown below 140.40 may see a deeper slide towards 113.60, which is the minor swing low area of 4th of June, congestion area of 2nd of June, and as well as the lower limit of this minor ascending channel that is in place since 13th of May and very close to the rising 50-day moving average as well. Right, so that's for the euro dollar, adjusting slightly upward the short-term pivotal support to be at 114.90 for today and maintaining its intraday trend bullish bias on the euro dollar. Next up will be the sterling pound, the sterling dollar. So the sterling dollar continues to trade in a sideways range, holding below the resistance level of 136.40. That's our first resistance level, and also the minor swing high of last Friday as well. And also the euro dollar continues to see a series of higher low as it continues to trade above the rising 20-day moving average. So no change. This zone here at 135.30, 135.10 will still be my short-term pivotal support level to maintain my intraday trend bullish bias on the sterling dollar. First resistance level to watch will be 136.40. Only a breakout above 136.40 may expose the next near-term resistance level coming in at 136.90. Only a bearish breakdown and hourly close below 135.10 will invalidate today's bullish bias to kickstart another round of a corrective decline sequence, retesting the minor swing low of 11th of June, 10th of June, and as well as 30th of May, acting as the next near-term support level at 134.70, 134.50. Only a breakdown below 134.50 may see a deeper slide towards 134.15, 134 figure level. Next up will be the Aussie dollar. So the Aussie dollar managed to find resistance at our short-term pivotal resistance zone that we highlighted earlier, 35, 65, 37, 65, 45 over here. So if you look at the daily chart of the Aussie dollar, it continues to be trapped within this sideways range configuration since 23rd of April. All right, it's going to trap within this sideways range configuration. All right, so yesterday price action during the US session hit the sideways range resistance level, resistance zone, and before it actually trade back downwards over here. All right, so what we could see over here is that given the bearish reaction of the short-term pivotal resistance level yesterday, so no change, we still maintain that bearish bias within this short-term within this sideways range configuration, with the next near-term support level to watch for today will be the 20-day moving average, where it managed to survive yesterday at 64.70, then slash 64.55, which is the minor swing low of 13th of June last Friday and 4th of June. So it's a support zone, I would say. So maintaining that bearish bias on the Aussie dollar as long as 64.37, 65.37, pardon me, 65.45 pivotal resistance holds, didn't break up, potentially it may revisit this 64.70/64.55 level again. So it's something like churning within a complex sideways range configuration. Unless we have an hourly close and a bullish breakout above 65.45, then we start to see a near bullish breakout scenario for the Aussie dollar to visit the next near-term resistance level in first step at 65.80. Okay, next up will be the dollar yen. So the dollar yen, as we await for Bank of Japan decision, I think it starts to be congested in this symmetrical triangle range configuration that is in place since the low of 27th of May. All right, and in early today's Asia session, it managed to do a squeeze up over here before pairing off its gains at this juncture. All right, so what I could see is that the RSI now seems to be on resistance as well. Okay, on this horizontal resistance, very near its overbought level. So given that I don't have any conviction right now on the directional bias of the dollar yen, so I would prefer to have a neutrality stance between yesterday's minor swing low area at 143.90. So still recall yesterday we do have a bearish bias. So the bearish bias, I put a downside trigger level at 143.90. It didn't break at the clearly below the downside trigger level before staging a bounce up in the US session and extending its rally in today's early Asia session, but find a bit of headwinds or resistance at this upper limit of this symmetrical triangle range resistance level. So I prefer to maintain a neutrality stance right now. So neutral between the minor swing high of 11th of June, just in case of any whipsaw, due to the impending BOJ monetary policy decision and the guidance that is market is actually peering out for on the statement on the monetary policy statement. All right, so 145.35 and 143.90 will be the neutrality range to watch for today on the dollar yen. Okay, so that sum up the intraday technical outlook on the major FX pair. All right, so let's look at the calendar. Whether has BOJ released the interest rate decision? Not yet. It doesn't seems to be out yet at all. So let's look at the latest news flow from Forex Live. All right, nothing out from BOJ yet at this juncture. Right, so now let us now proceed to our daily dose of market insights, covering the second segment of the daily dose, which is the intraday technical outlook. So now let us now proceed with the intraday technical outlook on the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 yesterday managed to squeeze up and hit our first resistance level at 24,220 level, which is the gap the former gap down resistance, and in today's Asia session it managed to actually see a pullback over here due to that potential we call it tempering of yesterday's risk on sentiment that is being seen on the US stock market. But nevertheless, it still continues to hold above the 20-day moving average over here. So what I could see over here is that I have a first support level to watch will be at 23,900, and I will use the 20-day moving average, which is close to yesterday's minor swing low area that shaped that recovery. Adjusted pivotal support will be at 23,690 for today. So as long as 23,690 hold, we will still maintain our intraday trend bullish bias on the Hong Kong 33, with the next intermediate resistance to watch will be at 24,490, which is the 0.318 Fibo extension, close to the minor swing high of 11th of June, and as well as the congestion area of 7th of March and 17th of March. Only a bearish breakdown and the hourly close below 23,690 that would invalidate today's intraday trend bullish bias to kickstart another round of choppy minor corrective decline sequence, exposing the next near-term support zone at 23,600/23,440, which also confluence with the minor ascending channel support drawn from the low of 16th of April. Only a breakdown below 23,440 may trigger a deeper minor corrective decline sequence to expose the next near-term support level at 23,630 as price action head down to retest the 50-day moving average. Next up will be the Nikkei 225. So the Nikkei 225, yesterday we were bullish as price action managed to bounce off from the 20-day moving average and the lower limit of this on impending potential minor ascending triangle range resistance. All right. So right now it's up towards our resistance level, very close to it, 38,850, which is the upper limit of this minor ascending triangle range resistance level. Potentially right now it may mean revert back again towards the lower limit of this minor ascending triangle range configuration. So with that, we will flip to a intraday bearish bias within this potential minor ascending triangle range resistance using 38,850 as my short-term pivotal resistance level. First support level to watch out for will be this level over here, which is close to the 200-day moving average at 38,140 over here. Below 38,140 may expose 37,680, which is the 20-day close to the 20-day moving average, and as well as the minor ascending triangle range support level. However, if we start to see a price action breakout with hourly close above 38,850, then potentially we will start to see a bullish breakout from this ascending triangle range configuration that was in place since 13th of May. That means that's close to about a month or so already, to expose the next near-term resistance in first step at 39,560, which is a 0.382 Fibo extension, and the minor swing low area of 14th of February and 18th of February. So that's for the Japan 225 using 38,850 as my short-term pivotal resistance for today, flipping back to a intraday bearish bias for it to revert back towards the lower limit of this potential minor ascending triangle range configuration that is still in play. Next up will be the Germany 30 representing the German DAX. So the German 30 yesterday, we do have a bearish bias. So the price action hit the pivotal resistance before shaping that bearish reaction. So still no change, still using 23,675 as my pivotal resistance level. And what we could see is that the hourly RSI has also staged a bearish breakdown from a parallel ascending trend line as well, indicating some form of downside momentum. So with that, 23,670 short-term pivotal resistance on the Germany 30, maintaining the intraday trend bearish bias over here. First support level to watch will be the minor swing low on last Friday at 23,310 level. Okay, let me put it in writing. 23,310, that will be my first support level to watch. A breakdown below 23,310 may expose the next support level at 23,150. All right, so 23,310 first support, second support 23,150, which is the minor swing low of 8th of May. Only a bullish breakout and hourly close above 23,675 that would invalidate today's intraday trend bearish bias on the Germany 30 to see a squeeze up to revisit the 20-day moving average, which confluence with the next intermediate resistance zone at 23,880/24,025. Okay, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average also has a bit of whipsaw at the 200-day moving average over here, which is our pivotal resistance at 42,580. Did a bit of prop up it, then thereafter come maintain the upside momentum, and it's staging that bearish reaction throughout this second half of the US session. All right, so with that, we will still maintain our intraday trend bearish bias on the US Wall Street 30. So giving a bit of excess yesterday using the high, the intraday high as my upper excess level. So that is will be 42,700. So a bit of excess. Oops, sorry. Okay, a bit of excess over here. So I believe the voice is still working. Mic test 1 2 3. Test 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 1 2 3. Yeah, good. I think the voice is still working. Excellent. So a bit of excess at 42,700. Short means 42,580/42,700 short-term pivotal resistance level. Still maintaining our intraday trend bearish bias on the US Wall Street 30. So first support level to watch will be at 42,180. This congestion area that's being formed in early Asia session. A breakdown below 42,180 may expose the next support level at 41,850. Only a bullish breakout above 42,700 that would invalidate today's intraday trend bearish bias to kickstart a potential recovery to revisit last Wednesday swing high area at 43,085 in the first step, followed by 43,290, which is the minor swing high area of 4th of March this year. Okay, next up will be the S&P 500 or the SPX 500. So the S&P 500 managed to stage that bearish reaction right off the pivotal resistance that we highlighted, 6,050. So no change, still using that 6,050 as my short-term pivotal resistance. And what we could see is that the hourly RSI managed to also have that bearish breakdown as well. Below is parallel ascending trend line, indicating some form of bearish momentum. First support level to watch will be at 5,980 over here, 5,980, which was the congestion area that's being formed in the Asia session yesterday. A breakdown below 5,980 may revisit last Friday minor swing low area, which is the 20-day moving average as well, acting as the key near-term support level at 5,940 next. Only a bullish breakout and an hourly close above 6,050 that would invalidate today's intraday trend bearish bias to kickstart another round of impulsive up move sequence to retest 6,093 before probing the all-time high at 6,151. So that's for the SPX 500. Next up will be the Nasdaq 100. So the Nasdaq 100 is pretty nasty. So yesterday, we have a short-term pivotal resistance at this 21,850. Squeeze up a bit above it, then it actually reintegrate back below it during the start of the Asia session today before staging another bounce. So it seems to us that it's still playing around with this pullback resistance of this dotted purple line, which is the former bearish ascending wedge support, now turns into a pullback resistance level over here. And the hourly RSI also starts to shape a bearish breakdown below its parallel ascending trend line support as well, so indicating some form of bearish momentum. So with that, I'll be watching 22,050, which is the minor swing high of 11th of June. So this could be a potential minor top as well. So 22,050 short-term pivotal resistance on the Nasdaq 100, still maintaining our intraday trend, still having that intraday trend bearish bias, but price action got to break down fast below yesterday's Asia session congestion area, which is my near-term support level at 21,000, which is my first support level, 21,650. A breakdown below 21,650 exposes last Friday minor swing low area, which is also a key intermediate support level at 21,500, which is the 20-day moving average as well. However, if price action starts to squeeze up and break above 22,050, today's intraday trend bearish bias will be invalidated to kickstart another bullish impulsive up move sequence to revisit the current all-time high area in first step at 22,200, 22,250. All right, so that sum up the intraday technical outlook on the major stock indices. So let us now turn our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, price actions try to probe around the short-term pivotal support that we highlighted yesterday. So what I could see is that the hourly RSI now, as price action shape lower low, okay, lower low, the hourly RSI now has starts to shape a higher low. All right, so indicating some form of slowdown in the downside momentum that is being seen on the intraday session yesterday. All right, over here. So having a bit of excess below that short-term pivotal support that we highlighted yesterday, the 3,004, I put it at 3,380. So right now we start to see a potential hourly hammer candlestick that is being formed right now as we are speaking. All right, over here. So with that, we will still maintain our intraday trend bullish bias, giving a bit of excess at 3,380. First resistance level to watch out for today will be at 3,450 level. All right, so 3,450 is the swing high area on Asia session yesterday, the Asia session intraday high yesterday. Okay, only a breakout above 3,450 may re-expose the current all-time high area at 3,495 slash 3,500 next. However, if price action starts to break down with an hourly close below 3,380, then this minor corrective decline sequence may extend further to the downside to revisit 3,346 slash 3,320, which is confluence with the rising 20-day moving average as well. All right, so that's for gold XAU slash USD. Let us now proceed with the West Texas crude oil. So like I mentioned over here, the West Texas crude oil managed to find some form of rebound at several key elements over here. So this dotted line itself, this dotted green line over here, or dotted turquoise green line, if you go to the daily time frame, is the former major descending trend line resistance from the high of 28th of September 2023. And yesterday, the price action sell off, all right, on the intraday basis due to the earlier positive news flow. And even right before today's Asia session, where Trump mentioning of that evacuation talk of Tehran evacuation talk, and where he decided to leave early from G7 summit in Canada to head back to Washington, there is a bullish pin bar or a bullish reversal hourly doji candlestick formed right as at the 11 a.m. session, okay, at the 11 p.m. session on the yesterday's US session, even before today's positive news flow. So there's some form of support being formed yesterday at the as we approach the second half of the US session yesterday, and it actually come back with a morning star bullish reversal, right? So this is the morning star bullish reversal, a long black candlestick, small bullish doji candlestick, followed by a bullish Marabuzu candlestick. And where does it form? It forms right at the dotted green line here, which is the former major descending trend line resistance from September 2003, and also right exactly at the 20-day moving average, okay, before staging this minor recovery in today's Asia session as we are speaking. So back above that 70 psychological level as well. So with that, I'll be using this support zone for sure. Very clearly, it's a key support zone, 70.60 slash 69.15. 69.15 is the 20-day moving average. So with this support zone, we'll still maintain that intraday trend bullish bias for West Texas oil. First resistance level to watch will be this minor range resistance that has been formed since the high of last Friday. Can't penetrate it on the Monday Asia session at 75.18. Above 75.18 may expose the next near-term resistance area at 77 figures slash 77.60. Only a clear breakdown below 69.15 that will invalidate the intraday trend bullish bias, that will invalidate the intraday trend bullish bias, and also invalidate last Friday bullish breakout to see it dwindle downwards towards the next near-term support level at 67 slash 66.27, and below 66.27 may revisit the 20-day moving average, confluencing with the next near-term support at 64.15 next. All right, so that sum up the intraday technical outlook on the major cross asset classes. So let us take a look at the Bank of Japan. So has the Bank of Japan released its decision yet? Okay, so it's at 0.5%. Right, so no change as expected. So Bank of Japan, Bank of Japan maintained is at 0.5%. So let's see the monetary policy statement. Is there any major changes on its monetary policy statement? Right. Okay, so let's see over here. Let's open up. Okay, so short-term interest rate maintained at 0.5%. Bank of Japan to reduce its monthly outright JGB purchase to about 2 trillion in January to March 2027 over here. Okay. Okay, the amount will be cut down by 400 billion each calendar quarter until January to March 2026. So So basically also unchanged regarding about this bond tempering purchasing plan over here. Right, so net overall, it seems to us that no major changes from the Bank of Japan. It did mention that okay, then Japan economic growth is likely to moderate and slow down in overseas economy, and a decline in domestic corporate profits among other factors. Underlying CPI inflation is likely to be sluggish, mainly to the deceleration in the economy. Then, however, it's expected to increase gradually, since it's projected that a sense of labor shortage will grow as the economic growth rate rises. There are various risks to the outlook. It is extremely uncertain how trade and other policy in each jurisdiction will evolve. However, overseas economic activity and prices will react to them. All right. So basically, the overall decision is very much expected as BOJ reaffirms its commitment to maintain stability and order in the JGB market. All right. So it seems to be more or less is a balanced stance in terms of monetary policy guidance over here, not hawkish and not dovish at all. So if you look at the dollar yen, it's almost, I think, going to trade within that sideways range. So if you go to the dollar, see the dollar yen, nothing, it doesn't move much over here. So if you look at the technical chart of the hourly chart of the dollar yen, right, it continues to be trapped within this sideways range over here at 145.35 and 143.90. All right. So the next, we call it potential event that could move the dollar yen will be Bank of Japan Governor Uda press conference that is likely to be due at the close of the Japanese stock market, which is i.e. around Singapore time 2 p.m. later in the afternoon. All right. So before we go, right, let's have a quick look at the economic calendar. What are other things to look out for other than the Bank of Japan interest rate, which has taken shape already? So in the European session, pretty much important will be tier 1 economic data, which is the ZEW Economic Sentiment Index from Eurozone that is out at 5 p.m. Singapore time, that could potentially influence the euro dollar, the euro crosses, as well as the German 30 CFD index. Then heading on next will be tier 1 US economic data, which is retail sales, that is out at 8:30 p.m. Singapore time over here. And thereafter will be a rather quiet US session. So as we head tomorrow, before the start of our daily dose, we have a tier 1 Japanese data out, which is at 7:50 a.m., which is the balance of trade. And also news flow to monitor will be the ongoing unclear situation between Israel and Iran conflict over here. So with that, that ends today's daily dose. I'm Kelvin here signing off, and we shall speak again tomorrow. Thank you.